All right, so when it comes to indicators when trading futures, I get questions that people DM me about and ask, "Hey, Mike, what's the yellow line on your charts?" That's just the VWAP. Okay, it's no moving average in particular, or an EMA or an SMA. It's not. And then to the right hand side, you see the volume profile. All right, the one I use is currently not available at this point. So this indicator or tool, you can find through other means as a third party provider. You just have to do your own homework because I do not know. I do know one thing is that NinjaTrader does offer a order flow suite. I believe the volume profile is part of their package, but I'm sure you have to have the lifetime license. And I believe that opens up the door to that suite. Now, the reason why I personally like using the volume profile is just kind of gauging volume. Volume is extremely important when it comes to trading. And I don't just trade directly right off of it the moment that the market pulls back, or, I'm using it as my number one source of making a decision. My, choices in which, when it comes to trading supply and demand, all come from, looking for high probability zones surrounding market structure and price action. I'm looking to see, first and foremost, which way the market is moving. If we're bearish, breaking structure to the downside, which I talked about in many videos, when it comes to the strategy, it's a step-by-step process, basically. First and foremost, I'll look to see off of a higher base chart, and whatever chart you use, to see or depict the overall direction. Once I've gauged or figured out the direction of the market, it's just simply looking to see, should I, mark up supply or demand zones. Of course, if we're bearish, I'm looking for supply zones, in which I'm going to show you an example, in this video here, supply setup and basically a demand setup. But particularly, we're going to be looking at, two indicators that I, by choice, like to glance at and use as a tertiary means of confluence. What does that mean? Well, confluence, I'm just using them as a means of, first of all, following through with the strategy step by step. Figure out market structure, which way I should trade. Then looking for a breaking structure on my higher base chart. Identifying, is there a key area of supply or demand to pull back to? And then once we pull back to that higher base chart or higher time frame chart, supply or demand zone, in this case here, 120 range, then I'm just moving down to my lower base chart to mark up a smaller zone off my entry chart that's on the inside of the 120 range. So basically, mark up higher base 120 range zone. Then mark up a 24 range supply or demand zone on the inside of the higher base zone. Okay, that's the kind of confluence that I'm looking at. The reason and purpose, I've talked about it in many videos, I move down and scale down. It just basically allows me to zero in, zoom in more so, and find a more defined entry point. All right, I don't want to get into a trade off of a higher base chart, especially for anyone who's a beginner that's trading with small capital. You don't want to do that because you may get stopped out and blow your accounts very, very quickly. Okay, but again, the two indicators that I personally like to choose by preference is the volume profile and then looking at the VWAP here. The VWAP is just, it's a strong indicator because it lets you know, first and foremost, what does it stand for? It is the volume weighted average price indicator, which typically lets you know where most of the volume is traded at when it comes to price action. All right. So I'm looking to see if I'm marking up a higher base supply or demand zone, like in this instance right here, which is a supply zone. We're going to talk about that real quick. I'm looking to see, is the market pulling back closer to the VWAP? But I want to see in when I'm marking up the zone if we're below or above the VWAP, okay? Because if we're below the VWAP and the market is breaking structure, that is the most important thing for me, is watching it and looking for structure breaks. To the upside or to the downside, are we below the VWAP or above it? If we're below the VWAP and breaking structure lower, then if the market is pulling back to a key area of supply, like right here, and we're below the VWAP, then I would be looking for to go short. All right, and marking up the zone first and then moving down to a lower base chart. But I'm also looking at, in reference to the volume profile, are we approaching, weaker or lower volume areas, outside of high volume nodes? I like to take my trades when going short above a high volume area where the volume is weaker or lower at, and then when I'm going long below a high volume node and looking where the volume is lower or weaker, because it shows signs of weakness. When areas where the market is, the volume is lower, they either are going to reject it or they're going to push through it really quick. In this case here, you see the supply zone right here where we are pulling back to a key area. This is a high probability supply zone with a gap attached to it. If you don't know what I'm talking about the gap back at the zone, I'm referencing an imbalance. A gap at the zone marks up a high probability supply setup. Why is this high probability as well? Multiple means of confluence here. We are breaking below structure. We're taking out lows back to the downside. This is a minor structure break here to the downside below this area at 426. Okay, this low that is made right here, if it breaks this, that'll be a major low back to the downside that it's going to break. So it comes down. We're making structure breaks to the downside, making lower lows and lower highs, breaking structure here, pulling back to a key area of supply right here with a gap attached to it or imbalance attached to it. And we're approaching back up to a lower area of volume back at the zone. If I was to use my volume profile tool, which allows me to draw like a micro range or micro volume area, let me include this right. Oops, sorry. All right, give me 1 second. Trying to, bring this further out. Okay, so I do this here, and if you see when it pulls back to this zone right here, we're into a weaker area of volume. I'll blow it up a little bit so you can see right here. This is a high volume peak, The lower areas, the valleys in between the peaks are going to be lower areas of volume, and price typically likes to reject that. So if I sum all this up, I'm looking at what's taking place. Market breaking structure, taking out structure to the downside, a nice gap back at this beautiful area of supply, aggressive selling, pulling back to the upper portion of a small little peak here, which is a high volume node, and in the middle there we have a low volume area. So with all that, confluence, if I get the rejection, then I'm looking to go short. All right, and so that is the reason why I would be looking to go short here. Now, I'm not going to go through the run through of the complete strategy. Please watch the video content because there are tons of videos on here where I'm breaking the strategy down, walking you through the strategy step by step, discussing the steps involved in the strategy. And if you want more video content surrounding the trade breakdowns where I go into detail about the strategy, covering setup after setup on trades that I posted over in the Discord community. For one, you can join the Discord. It's free of charge. Okay, the link is down below. Below that link, you'll see a second link where it says become an elite channel supporter. That's where you're going to get all the meat and gravy and the sauce right there in reference to trade breakdowns where I'm going into detail in reference to the strategy. Trade setups that I've actually taken and posted them over on our Discord community, but I break them down to those that are channel supporters, okay? Those that support my efforts as a content creator, because that's what you're doing when you basically enroll or subscribe to become a elite channel supporter. It's very inexpensive. It's only $6.99 a month. Think about that. That's basically less than the price of a cup of coffee that most of you pay per day. This is for a complete month, $6.99 a month, but you get tons of trade breakdown videos where I'm walking through setup after setup, and let you know the reasons and the purpose of why I've taken certain trades. But I'm also walking you through the strategy, okay, when it comes to multi-chart confluence, looking at supply, marking up higher base zones, lower base zones, the whole full spill, okay? Also, you get the video playlist and a great video that I covered on market structure for anyone that's struggling with market structure. The link is right down in the description portion of the video. Once you click on become a channel supporter, 2 tiers will pop up. Make sure to choose that second tier for $6.99, and it's going to give you access to the video content. All right, so this is the reason why I would be interested in taking this supply setup here. Now, if we move on, again, we're below the VWAP here, okay? What marks up for me, decision making wise, to look for opportunities to go short. All that was a lot of confluence built into. So let's move through a demand setup right quick. So let's take a look at this zone right here. This is a beautiful demand zone marked with it's an imbalance or gap, so it's a high probability zone. And the reason why I would take this trade going long, if we come back to this area and we have a zone within the zone, is because the market is breaking structure to the upside. We've taken out this area of structure right here, okay? Same area where the market broke this low here. Now it's come back up and it's taken out this high right here, breaking structure to the upside. Pulls back, comes back to this area of demand. You can see market went to a little bit of consolidation here, trying to figure out which way it was going to move. Break structure to the upside, comes back, high probability demand zone resting right here. But if we look at where are we above the VWAP right here, okay? So I'm just not taking my trades anytime the market is just above the VWAP or below it. I'm looking for first and foremost fall structure. Secondly, I'm looking for high probability zones, okay? Off the higher base chart, mark them up, comes back to it. Then I'm looking at the position or placement in reference to, are we above the VWAP? Yes, strong indication the market may still be wanting to continue to the upside. Where else are we at the in reference to the market? All right, the market is below a high volume node here. Okay, if you see this, low volume right here. Even if I was to draw out, let's say, a micro range tool right here, back to this area of demand right here, look where we're at. It comes back, okay? It's at this high volume node right here, kind of pushing through this little low volume area here. But if I really was to bring this more into the picture, let's see where we are at. Just trying to focus in on this little area right here. Okay, so let's do this. All right. And then it comes down. As you can see here, it slightly breaks right a little bit slightly below this peak of this volume area here. And that's what I like to see. If we're breaking or close to a high volume area and kind of breaking right below it, the market likes to reject areas and snatch back to the upside. Sorry about that, guys. My puppy or dog in the background was kind of getting excited and started barking. But anyways, likes to reject areas and then push back up. But again, we're looking for confluence, right? The more confluence we have on our side, the likely or higher the probability is the trade is going to work out going in our favor. Breaking structure to the upside, pulling back, key area, a beautiful area of demand resting right here. All right, with a gap attached to it or imbalance attached to it, above the VWAP. You know, we're looking at in relation to the volume profile. We can see the market is approaching a lower area of volume here in this high volume area here, but it's still a low volume area there and rejects out of that and then pushes to the upside, as you can see there. So these are the reason why my preference or choice of using the VWAP and the volume profile tool. That's basically, you know, all I really need as far as a means of using a tertiary tool like the volume profile and the VWAP. Do I need to trade with? No, I don't. But these are probably the top two indicators that I would use, you know, in making preferences or having preferences and making personal choices when it comes to, you know, following structure of the market and looking at price action. But it's the last thing that I actually look at when going through the rhythm of trying to pick my setups. Should I get into a trade and executing? All right. So I'll glance at them to see, okay, where we at in relation to those two indicators. Now, you don't have to use them. Whatever works for you, I always talk about to continue doing so as long as you're consistently profitable. But it's just my personal preference, and I wanted to bring that to attention to those individuals or to all you out there that constantly ask, hey, what's the yellow line on your charts? You know, it's the VWAP again, and then to the right, the volume profile. But I'm letting you know this also, in, you know, letting you know how I actually use the volume profile when it comes to adding it into my actual trading plan. Okay, I'm not playing, but the strategy and how I trade. All right. But outside of that, that's all I have for you guys today. I appreciate everyone tuning in, as you always do. Hope everyone had a fabulous Christmas, and as we get ready to celebrate and bring in a new year for all those that celebrate the holidays. Wish everyone a safe weekend this weekend. I haven't done any trading today, and I probably won't do any tomorrow, just due to volume. I'm not saying that there's not any probably good setups, but I haven't even looked at the market today, to be honest with you. I'm just taking some time off, and I'll get back into it next week. But anyways, if you do me the biggest favor and you're not a sub already, please take the time to go ahead and subscribe by clicking that sub button. Make sure to turn on your post notifications so you don't miss any of the uploaded content that I post on or pretty much on a daily basis. And if you're interested in joining, well, click on the bell, okay? Turn your post notifications on right after you click the subscribe button, okay? But also, if you're interested in becoming a Discord member, it's free. The link is down in the description, as well as the link to become a elite channel supporter for all those that really want the full-on, you know, sauce to or the breakdowns of the trades and things I talk about in reference to the strategy. It's there. You may want to think about becoming an elite member by clicking that second link, all right, down in the description. But outside of that, I appreciate everyone that's tuning in today and watching the video. And that's going to wrap it up. And do me the biggest favor before you jump off. Go ahead and click on that like button, that little thumbs up button. Please click that if you found value in today's video content. And hopefully this answered a lot of questions out there for all those that have questions about indicators, that a choice that I like to use. Okay, take care.